Welcome to this Astranti case study highlights reel. We'll be looking at a bunch of videos from our pre-scene analysis and mock debrief series that will aid you in passing your operational case study exam. And by the end of this video, you will be a step closer to passing your case study exam as we go through some of the key points we found in each of our videos for the current pre-scene. Starting off then, we have 5 videos for you today, and each video covers different areas of the case study. Our first video is the pre-scene analysis, and this goes through the CIMA pre-scene for the operational case study exam, and this video aims to help you maximize your marks and perhaps most importantly, minimize your study time. Many of you have busy lives and cannot spend hours and hours reading and analyzing the pre-scene yourself. So what we do is analyze it for you so that you can focus more of your time practicing theory and the mocks. And so in this video, our OCS tutor James will be going through the company profile at the beginning of the pre-scene, which will give you context for who our pre-scene company, Trax Europe, is and what they do.
So let's move on then and actually take a look at the company background and learn a bit about the company, its history, what it does, industry, and all those sorts of things. So first of all, we are Trax Europe. Straight away, giving us a location. We'll talk more about that in a minute, but Trax is the name, or Trax Europe specifically is the name of the company. And what they do is manufacture and sell tractors used for agricultural purposes. So as a manufacturing company, this opens up the door for exam questions on things like costing, budgeting, and variance. Obviously, costing and budgeting can apply to non-manufacturing companies, but it's very easy to write those questions when you have a company that deals with manufacturing and a particular type of manufacturing as well. We're talking about agricultural vehicles as well. So, that's where we are. They don't only manufacture, obviously they sell their tractors. We'll learn a bit more about their kind of sales network in a minute. But basically the question here is who are the customers? Are we selling directly to the end consumer? So it would be the farmers or the agriculturalists. Or is it more of a B2B where we're selling to, specialists who then sell to the end consumer? Agriculture, obviously this is the kind of although this is manufacturing vehicles, so to some extent we're talking about the vehicle manufacturing industry. This is a specialist type of manufacturing. We're talking about agricultural, particularly it's tractors. So agriculture, just to flesh that out, that is all things to do with farming and raising livestock for food. Lands, crops, and the various machineries that go with that. So we are kind of a supplier to the agriculture industry, particularly tractors that will be used for ploughing fields and growing crops, and a lot of the day-to-day operations related to farming. And agriculture itself, a huge industry. It ranges from you can have small farms and kind of small producers right through to huge industrial level agriculture. So that itself, we'll learn a bit more about that in the industry analysis. Really here we're focusing on what's in the pre-scene. So the company is based in Teeland, which is a country in Europe. It has the T dollar as its currency. Okay, so we know that it's based in Europe, which obviously there's a variety of different types of political system in Europe. If we're talking about the kind of country that Teeland might be, typically in these exams, these countries are based on Western democracy. So it's similar to the UK, France, Germany, the Nordic countries as well. So it's that kind of thing. You've got a capitalist, liberal democracy with some elements of welfare. Obviously, you're going to have fairly well-developed employment rights, possibly a member of the EU. So talking about an advanced capitalist democratic state, as opposed to, China is a very different type of country, but politically and economically, that is different itself to India or other parts of Southeast Asia. So knowing that it's in Europe does build a picture of the type of company it is, and some of the context and background for how this company will operate. Tractors are manufactured at the company's production facility in Teeland and sold throughout Europe. Okay, so obviously as a manufacturer, they're going to have a production facility and a significant investment in their property, plant and equipment in order to make these tractors and sell them. They're doing it sounds like they're mostly doing all of it in-house. So they're buying in raw materials and, building up these tractors from scratch. So, that's going to require a significant labor force. And having a production facility, talking about, manufacturing, health and safety obviously comes into that for the staff. Again, talking about Europe, we don't know whether it's in the EU, but obviously the employment and staff kind of legislation and health and safety standards in Europe are higher, probably some of the highest in the world compared to other places. So that's going to be a significant factor. Obviously, we've got staff. And the staff training required, the different types of staff you need to, you're going to need mechanics and engineers, as well as maybe slightly more basic level assembly and operations. You need cleaning staff, you need management staff, you need HR and all the different functions of a company too, obviously. But that's where we are with this. And they are sold throughout Europe. So it does slightly limit it. We know that in terms of the markets that the company operates in, it is, as the name suggests, just focused on selling in Europe. And we'll learn a bit more in a moment about why that's the case. So Trax Europe is a wholly owned subsidiary of Agri, which is a leading global manufacturer and seller of a range of agricultural equipment, including tractors and combine harvesters, trailers and plows. So let's just kind of break that down a little bit. So first of all, Trax Europe is a subsidiary of a larger parent company. So as the parent, that means Agri has ultimate control of Trax Europe. Because as a wholly owned subsidiary, that means the shareholder, the only and singular shareholder of Trax Europe is its parent company. And so it's the parent company that are calling the shots and will be ultimately making many of the decisions and deciding on how the company goes forward. Because as the shareholders, they're the ultimate, the ones that the company has to manage. Trax Europe is managing the company on behalf of the needs of Agri. So that's an interesting one. You haven't seen that in many case studies, operational case studies before, being a wholly owned subsidiary of a parent company. So to some extent, although we work at Trax Europe, we need to focus specifically on Trax Europe to some extent as part of a wider company of Agri. That does need to come into considerations, and I'm sure that will be a big part of how the exams are kind of play out. So Agri now, the kind of the parent, the global manufacturer, they do a range of agricultural equipment. So whereas Trax Europe is just tractors, Agri does tractors, combine harvesters, trailers, and plows. So this has given us an idea of the broader product range in the agricultural equipment market. So in addition to tractors, there are other types of vehicle that are used in farming. Agri is based in North America, and it was founded a very long time ago in 1860. It initially manufactured plows and farm implements designed to be pulled by horses. It launched its first engine-powered tractor in 1920. So here we're talking about, an old company. It's founded, 100 to 150 plus years ago, during kind of, eras. This is a completely different time, 1860, before, this is the time of steam. You don't really have electricity widely used at this point. You're using horses and oxen, and so you've got a company that's been around for a very, very long time. So again, going into this, although we work for Trax Europe, we do have to always, at all times, really think about Agri, because they're going to be one of the companies, it's a key stakeholder really for the company as the parent and owner. So knowing a bit about them and their history and their vision and plans is obviously going to be important. Another thing to note here is that because it's a company from North America and it's hundreds of years old, There's going to be a different culture there than perhaps there is or was at Trax Europe. Trax Europe presumably being an independent company before it was purchased by Agri. So we'll learn a bit more about that as we go on through. So Agri has numerous subsidiaries. So Trax Europe is just one of a number of subsidiaries, some of which manufacture and sell finished products, tractors. So that would be Trax Europe would fall into that category. Some of which make components and sub-assemblies such as tractor cabs. Okay, so that means Agri owning these different subsidiaries, both the manufacturers and the suppliers to those manufacturers, means they've got a significant amount of control over the supply chain from the raw materials through to manufacturing and then selling those to consumers. So they're obviously a significant and very large, well-established and powerful company in this particular industry. There are only two subsidiaries which manufacture and sell tractors. Trax Europe, that's us, based in Teeland, which serves the European market. And then we've got Trax America, based in, as you might guess, North America. But it serves the sales markets not just in America, but also Australia, New Zealand, and parts of Asia. Okay, so we're starting to get a clearer picture here that Trax Europe is really being run as an extension of Agri, particularly it's the European part of Agri that sells, the manufactures and sells tractors in Europe. So there really is limited scope for expansion for Trax Europe since Agri owns them and they own a kind of an American division that deals with kind of sales in America, Australia, New Zealand, and parts of Asia. So those markets are not going to be available for Trax Europe to grow into, although there are still some places left in the world where expansion might be possible. European expanding maybe out into Western Asia, Middle East, North Africa. Those areas are still available for expansion, I suppose. Trax Europe was set up in 1960, so not still quite a long time. You know, you're talking 60 odd years. And it was actually set up as a result of Agri expanding its operations into the European market. So it's not an independent company of its own. It really is a subsidiary. It's set up as an independent entity, separate, but is really just an extension of Agri. So as we go through this pre-scene, we really do need to be thinking of it as the European branch, as it were, of the overall Agri business.
Our next video is our strategic analysis, where we look at the big picture to understand where our pre-scene company Trax Europe is going and how you can relate the pre-scene to key models found in F1, P1 and E1. While you may be a finance officer in the OCS exam, being able to appreciate Trax Europe's strategic direction will help you write more well-informed answers in the exam. And so the goal of this video is to primarily maximize your marks by highlighting some of the key points from the pre-scene, cut down on your study time by making a connection as well between the pre-scene and different theoretical models. So in this video, James will explain how we use the rational planning model to perform this analysis, and then he'll go through our SWOT analysis of Trax Europe.
So with the strategic analysis, we use something called the rational model, the rational planning model. And basically, it's a way of breaking down the business and looking at it in order to come up with a strategy. So it starts by considering the business in the future, where the organization is heading, where it wants to be. And to get a clearer picture of that, you consider the company's mission, vision, its strategy, its objectives and performance measurement that are put in place in order to meet those long-term objectives. We want to try and get a sense of the company's critical success factors, those things it must do in order to succeed. We're going to consider stakeholders and map the stakeholders. We're going to look and consider ethics and corporate social responsibility as well. Going through all that gives us a clear vision of where the company wants to be in the future. And then we're going to revert to now and look at where the organization is. And the things we'll look at there, the marketing mix. We're going to look at the 4 Ps to understand the company's product and how it promotes it. We're going to look at Pastel to get an understanding of the overall environment in which the company is operating, and looking at those 6 different key elements of understanding an environment. We're going to look at Porter's value chain to understand how the company adds value through its different activities. And we're going to finally kind of summarize pretty much everything we've looked at in a SWOT analysis. And that's a fairly detailed SWOT analysis, taking everything into account. And from that SWOT analysis, we will then define a business strategy going forwards. Why are we going to do that? Why is this useful to you in your exam? Basically, it's a very big picture analysis of the company. And having gone through this and watched this video, you'll have, a very clear list of strengths, weaknesses, opportunities, and threats that will tell you kind of what the business is doing well, what it's not doing so well, the threats and opportunities it faces. So when you go into the exam, you'll feel as though you work at the company and that you know inside out, and that will help you to give really good answers in the exam itself. Worth bearing in mind, you won't be examined on the content of this video. This is really just a tool to give you that deeper insight into how the company works. Okay, so moving on then to the SWOT, really what we're going to do here is kind of take a lot of what we've looked at so far and a lot of what's in the pre-scene, so slightly outside of what we looked at so far, and summarize it in a kind of SWOT analysis. A SWOT is strengths, weaknesses, opportunities, and threats. It's a very basic model. And then once we've done that, we can develop a strategy based on the SWOT. So the idea is that the strategy will capitalize and continuing to build on strengths, overcoming and mitigating weaknesses, acting on suitable opportunities, and then overcoming or mitigating threats. So let's take a look at the key strengths first. Obviously, the company has a reputation. Agri in particular has been around since the 1860s, and so that reputation is going to be valuable to Trax Europe as a subsidiary, as an extension of the parent. They have Trax Europe has a decent market share. Overall, it's one of 3 major players in Europe, and it's a pretty close between first, second, and third. So it could easily switch from, even though we are in 3rd place overall, we could easily become first just by increasing our percentage points a little bit. We have had the product development center moved to Europe. That gives the company, new opportunities. Relationships with dealers are good. We know that the director of sales has increased sales by 20% over the past several years. I can't remember exactly how many years it is. And our relationships with dealers are essential. That's a critical success factor, and I think it is a strength too. The company's had good growth in revenue, and is predicted to continue to grow. So, and it's slightly ahead of what the industry as a whole is predicted to grow. So that's good. There's very healthy margins, and we've seen growth in margins too, looking at the financials. HR, having an HR director who's kind of really committed, who has that expertise and is really cares about employee welfare. I point that out because it's not always the case. I've seen lots of operational case study pre-scenes, and oftentimes there isn't even a HR manager, let alone a director with that particular focus and motivation. Moving on to weaknesses. The one weakness is kind of the limit in the range of tractors. So although there are 9 different models, when you take all things considered, they are all large tractors. Even the smallest option is a very large tractor and would be, far too big and too expensive for a kind of a smaller farm or smaller needs. There is obviously going to be limited global reach. That's kind of built into the function of the company in some ways, as Trax Europe is really just the European arm of Agri, in particular tractors. So we know that Trax America deals in a lot of other global markets. So there's limited room for growth for Trax Europe. They are reliant on dealers, those kind of the middlemen, really big major part of the structure of the industry. Obviously, there's costs that come with that, and the reliance, it's just another set of relationships to manage and add to the power dynamics. There are some issues around the liquidity. If you look at their short-term liquidity, they're kind of not quite matching. They've got more current liabilities than current assets. That's particularly driven by their fairly high payables, which is a bit of a concern. They've also got a significant amount of long-term debts, that's going to obviously incur significant finance costs or interest, and that turns out to be expensive. It also has put the company's gearing very, very high, which would, from an investor or a lender's point of view, they would consider the company to be high risk. Opportunities, particularly with this product development center, for increased automation in the manufacturing process, or developing new technologies that increase efficiencies, or potentially can go into the actual tractor models themselves. In terms of product development, a new range of tractors, maybe the subcompact tractors meeting the demand that's mentioned a few times in the pre-scene of the increasing popularity of that particular smaller tractor. Market development. So although there's limited global reach, there is there's no presence in Africa, and Europe being relatively close to certain parts of Africa, that might be a place for growth. Also, we know that Trax America only operates in some parts of Asia. We don't know which ones, but it might leave other parts of Asia that are available for Trax Europe to expand into. In terms of penetrating the market, greater advertising, there's very little information on advertising in the pre-scene and the marketing approach. Again, assuming that is done by Agri, but we don't really know. Another opportunity is kind of wider diversification beyond simply agriculture. So the products that are made, the tractors, have a wider use outside of agriculture. So, for example, the construction industry, or any of the other various industries, whether logistics, space agencies, all of those use technologies that are basically the concept of a tractor being a high power, traction engine. That technology can be used in lots of different areas in the company, given that they make that technology, potentially could, go beyond that. Threats would be competitor activity. We know that Trax Europe is just one of three of the leaders in Europe, and those other competitors in very similar positions. And so if they were to make a move that increase their market share, that would be a threat. The price of inputs continues to be a threat. If steel goes up, if any of the cost of components go up, that's obviously going to eat into the margins. Any loss of supplier, particularly the steel supplier or the paint supplier, if we were to lose those, or that they were to significantly change their terms, that would be difficult for the company. Also, a loss of a dealer, any of the major dealers, if they were to sign an exclusivity deal with one of our competitors, that would leave us in a tricky position. Any new regulations that might come in, such as regulating the use of diesel or fuel, or regulations impacting the manufacturing process, could have an impact too. And then the loss of any key staff, whether that be a director or someone working in the product development center, one of the engineers or mechanics, particularly one of the senior ones that are difficult to replace. That could be a threat too.
The third video is the industry video. Now, this is a summarization of the industry pack delivered by our industry researcher Kenny, who will guide you through the key issues that are present in the tractor manufacturing industry. And the reason why we've created this product is to help you understand the broader industry issues without needing to crawl through all these websites, synthesizing information, and then figuring out why it applies to the pre-scene company in the first place. We've done all the heavy lifting for you. So now that you can focus on just reading it, absorbing it, and then getting on with more important things like reading the mocks and practicing the mocks, more importantly, and doing other forms of revision in preparation for your exam. So what we'll be looking for in this video is to apply some real-world examples where possible. So that way then you can eke out some extra marks in your exam solutions. And so what we'll be looking at now is Kenny's explanation of the types of products we see in the tractor manufacturing industry and why this is important to our pre-scene company.
Let's move on to the product section. We've all seen a tractor, but what does it actually do? Tractors help a farm become more efficient by providing tractive effort. This helps mechanize a farm. Tractors can also be used for construction and logistics, but most tractors are sold to farms. You're going to see the term horsepower used a lot. It's not important what horsepower actually is, it's just important that it's a measure of power. The tractor market is primarily segmented by horsepower. As you can see here, we have subcompact tractors, which are used for gardening, which have a horsepower range of between 15 to 20, and row crop tractors, which have a range of 91 to 120 plus. These are used for more intensive farming operations like harvesting. Tractors are also separated by drive type. These can be four-wheel drive, which have greater versatility, and two-wheel drive, which are generally used in dry farming conditions. While most brands do manufacture both kinds, the demand for two-wheel machines has decreased, so some manufacturers have stopped making them. Durability is also an important factor for a tractor, as a farmer obviously wants it to last as long as possible. Tractors can last from between 4,000 hours to over 15,000, depending on the model. Engine type is also important. Tractors can either have a 3-cylinder or 4-cylinder engine. 3-cylinder engines are cheaper to produce and more fuel efficient. This means that they last longer. 4-cylinder engines are more refined and have more streamlined motion and quieter engine operation. This makes them generally more popular, especially since they pack more of a punch in delivering power. Directly related to the above, fuel efficiency is important. Most tractors still use diesel, though there is an increasing pressure for a move away from this due to the environmental impact. Tractors also obviously differ in style and comfort. A farmer may spend most of their day in a tractor, so it's important that it's comfortable to sit inside and does not overheat. Technology is probably now the most important differentiator between tractors. Companies like John Deere use advanced technology, which allows mobile data transmission to let farmers collect data on their fields, for example. There are concerns about the use of technology, such as John Deere being able to remotely disable vehicles, but technology is definitely a shift that is inevitable and will change tractors forever. How does this relate to Trax Europe? Trax Europe produces more powerful tractors, as the smallest and most basic model is still 120 horsepower and comfortably in the row crop category. Its price points are affected primarily by the horsepower of its engines. Additional features such as air conditioning, ergonomics and cameras also factor into the differences between basic, regular and premium in each range. Its regular A+ model sells the most units and generates the most revenue, suggesting that most farmers don't need the extra horsepower or the premium extras. However, with an average selling price of $95,000, even the A+ one still represents a long-term capital investment for a farmer that will generate most of the farm's revenue in the long run. Therefore, the focus is on how much a tractor can improve the efficiency of the farm, rather than on more trivial things such as style. The product development department of Agri has moved to Europe 6 months ago, so Trax Europe now has a big responsibility to both improve individual parts and to develop new models of tractor that will give Trax Europe a competitive advantage. Presin has an article that draws parallels with the fashion industry, showing how end-of-life management should be taken into account during the production of tractors. This means choosing the most durable materials and thinking about how disassembly could eventually lead to parts of a tractor being reused or recycled in the future.
Our penultimate video then is our top 10 issues. Now, this is a compilation of what we believe to be the most common and likely issues to appear in the case study exam. While by no means an exhaustive list and in no particular order, this list is designed to focus your revision by giving you a list of subjects that you could revise to cover yourselves in the exam. And so once again, the purpose of this video is not only to highlight some of the key points from the pre-scene, but also once again cut down on your study time by giving you a list of issues, a list of theories that you can then prioritize your learning on and save time, as opposed to revising theories which you're not entirely sure might be entirely relevant for your exam. And so James will be going through one of these issues to demonstrate how we pick them, what to think about, and the theories you'll need to revise should you see an issue like this appear in the OCS exam.
So with that said, let's go through our 10. These aren't in any particular order, but everything has to be ordered at the end of the day. So we're going to start with number 10, which is financial reporting. The reason I chose this is that it's a key F1 syllabus area. It's kind of the main part of the F1 syllabus. It's nearly always examined, and we do have a manufacturing company, so we have a manufacturing perspective from which to do these types of questions. So the likely issues will be things like the purchase of new assets, property, plant or equipment, or potentially the disposal of property, plant and equipment. It will be leases. So leases are specifically, we know that the company uses leases, and so it will be leasing new machinery or a lease coming to the end of its term. Any revaluation of existing property, plant and equipment. Inventory valuation, so valuing stock, the tractors in this case. Another area where it comes up is in tax allowances and accounting for the impact of tax on certain purchases or disposals or capital gains, whatever it might be. So the key points to raise in those various different scenarios, the way to approach this really actually, a general approach is to make sure you apply the requirements of the financial reporting standard. Obviously, you need to know the financial reporting standard first. So if it's IAS 16, PPE, for example, you need to know the standard fairly well. You need to apply the standard requirements. You talk about the impact on the financial statements. So what will the impact be of a particular purchase or writing off a asset or whatever it might be? What that do to the financial statements? And you need to know your debits and credits. And obviously you can remember the mnemonic DEDCLIC for remembering those. So debit, an increase in equity, assets or drawings; credit, an increase in liability, income or capital. The relevant theory here is kind of all from F1 really. So IAS 16 for PPE, IFRS 5 for disposals or non-current assets held for sale, IFRS 16 for leases, IAS 2 for inventory, and then obviously with the tax aspect of it, the most likely bit to be relevant will be the capital allowances and how to account for capital allowances, and that's basically tax depreciation.
And finally, our last video is on the mock debriefs. After doing all of the above, you'll need to practice your mock writing skills. But breaking down a question and writing a solution is far easier said than done. This is why we have the debrief video series. These videos explain how we would break down the questions in the mocks and form plans to write a solution to maximize your marks during the exam and also help you learn from your own mistakes. To that end, what James will do now is break down the question to the first task in our mini mock to demonstrate this process.
So a few notes, obviously, as this is a demonstration video, it won't be done in real time. In the actual exam, you'll need to do this a bit faster than what we're going to be able to do today. But as we go through the mocks, perhaps I'll do a little bit faster in one of the later ones so you get an idea of doing this in real time. But to start with, we are doing the mini mock. The mini mock has 2 tasks. It's half the length of the full mock. So we're just going to ease into this and start thinking about how we might approach an exam. And if you've already tried the mock exam, the mini mock, that's fine. Maybe in this video you'll see what you did right and perhaps some areas that you can improve on. So as with most of these, you come into work, you switch on your computer to find an email. The email is from Ben Schultz, who's your finance manager. And Ben is saying he's been looking into our budgeting approach following a recent management meeting about the discrepancies between our actual and budgeted figures over the last 2 financial years. So straight away, we're getting an idea what this is going to be about. So it's about discrepancies between actual budgeted figures. So that's suggesting that maybe there's a problem with our approach to budgeting, and this is indicating what our question is going to be on. So we've been using the same approach for years. So again, what I'm highlighting here is the information that might come in useful to refer to when we start building the plan. So the fact that there's discrepancies and that we've been using the same approach for years. Although we've grown substantially in that time, so maybe we've outgrown the budgeting approach. Therefore, I'm reviewing our current approach to assess whether it is our best option going forward. Please respond with a report. So that tells us the kind of medium of our response. That covers the applicability of a participative budgeting approach at Trax Europe, along with its advantages and disadvantages. Please conclude your analysis with a final judgment on the suitability of this system for our business. So that's going to be subtask A. Let's make some notes about the amount of time we want to spend on that. Now, in this case, 45 minutes is how long we have for this whole task. This is just subtask A. And actually, as we scroll down, we'll see there are 3 subtasks. So this is 32% of our time. So 32% of 45 minutes. You haven't got to be exact on this. It just gives you a rough idea of how long. So in terms of time, it's probably 14 minutes. And in terms of marks, it's going to be worth about 8 marks. And the reason we do that first is so we have an idea of what it is we need to cover. So obviously it gives us a scope. So if we're looking to get 8 marks for this, we've got about a quarter of an hour to do it. What is it we're going to cover? Well, there's a few things here, isn't there? We're looking at the applicability of a participative budgeting approach. So we're going to be looking at its advantages and disadvantages and a final judgment on suitability. So in fact, what we're doing here is probably a couple of things. First of all, we want the advantages. Secondly, we want the disadvantages. And then thirdly, we want to kind of comment on its applicability and suitability. So let's call that applicability. So I would call that 3 things. And to get those 8 marks, then we're looking at maybe 2 or 3 disadvantages for each. So 2 advantages, 2 disadvantages, fully explained, and then kind of bring it all together in applicability and suitability. So you're looking at, that's how we're going to get our marks for that subtask. So that's just one of 3 though. So let's keep going and look at the next subtask. So we're working with our parent Agri on a strategic plan to expand sales. Okay, so we're getting an idea again, expand sales beyond strictly the geographic region of Europe. Although there will be no overlap with the regions in which Trax America operates. Obviously, we are one subsidiary, we're the European subsidiary of Agri. There's Trax America that operates in a number of places. This should be our pre-seed knowledge by this stage. Trax America operates in North America, Australia, New Zealand, and some parts of Asia. So we're not going to overlap with anywhere that Trax America operates. To that end, I've been asked for input in identifying the most suitable geographic regions to be considered. So this is what your manager has been asked to do. So your manager has been asked to identify the most suitable geographic regions, but that's not what you'll be doing. That's a level above what you'll be doing. What you're about to be asked to do is something to aid that job to identify suitable geographic regions. So let's see what it is. A key element of assessing suitability is the level of risk that the expansion will pose to us and our operations. So please explain both risk appetite and risk tolerance and apply these ideas to the risks we currently face in relation to international expansion. So I'm going to underline that there in red. Apply. So what is it we've got here? So let's first of all do the breakdown. So 36%, that's slightly more than the last one, is it? So let's give ourselves 16 minutes for this. Okay, and in terms of marks, we'll say it's 9. Again, don't have to be too specific with this. Ballpark is fine. It gives you an idea. It gives you some scope. So we're looking to get 9 marks for a question on looking at risk appetite and risk tolerance and making sure we're applying that to international expansion. So what are we going to do? First of all, we're going to cover what risk appetite is. Call that risk app. What are we going to do next? We're going to say how risk tolerance is related but different. So we're explaining what those things, and then we're going to apply, well, make sure we're applying that. So a brief explanation of the two, and then we need to make sure as a third thing that we are applying that to Trax Europe. So thinking about what the risk appetite, what the tolerance might be for risk in Trax Europe. And then one final thing is kind of thinking about how that relates to international expansion. So maybe a fourth thing here relating to that. So there's plenty of things to do. And the reason I'm doing this is I'm giving a detailed structure so that when it comes to, you face this and you think, gosh, how am I going to write a question on risk appetite and risk tolerance that gets 9 marks? you're just going to start writing about risk and hope you get there, or you're going to have this nice structured approach where you say, I'm going to talk about this first, a couple of paragraph or so, paragraph on tolerance, applying that throughout to Tract Europe and kind of talking about their risk profile, and then making sure that it has an application to international expansion too. So that structured approach, suddenly 9 marks seems quite feasible, doesn't it? Okay, so let's continue on taking the same approach. South Asia appears to be a key growth market. So let's highlight that. This is obviously where the growth is expected. This is potentially where we're going to go. That's a key growth market, and one country in that region that has already been identified as being a good starting place is a place called Lauristan. We would initially need to use a local distribution business to help us serve this new market. So we're talking about, if we do expand into Lauristan in South Asia, we're not just going to go in and be able to start operating with our own stuff. We need to work with local distribution businesses to get our tractors out to dealers and or farmers. So as a company that has a commitment to sustainability, I don't believe that's covered in the pre-scene. So that's new information. Do look out for that in the exams. So, we're giving new information. A company that we're saying here has a commitment to sustainability. So again, we need to factor that in and make sure we make reference to that in the question to show that we understand. Please, can you highlight some of the potential ethical issues? So we've got an ethical issue here we may face as a result of our use of this local business and the undeveloped employment legislation in Lauristan. Okay, so we've got it's all kind of wrapped up in there, but let's break this down. Again, 32%, that's going to be 14 minutes and 8 marks. And how are we going to structure this? Let's have a think. Okay, so the first thing is that it's ethical issues, and the particular ethical issues is around employment legislation. So let's start with that. So point 1 is going to be kind of overview with a particular focus on employment. And then we're going to kind of, in that, we'll talk about how the kind of the environment in which Tractors Europe normally operates and how that might be different to Lauristan. And then we'll kind of just break down. So we're looking to get 8 marks here. So the marks were going to come from just talking about those different aspects. So what aspects are affected? So we're talking about ethical issues and an ethical issue around using, a supplier that doesn't treat its employees very well. There could be a reputational hit. And there's obviously the wages comes into this. If there's a lack of minimum wage, for example, or there's exploitation. Contracts, such as 0-hour contracts. And then health and safety, that comes into it too. So these are kind of the areas relating to employment that have an ethical slant. So if we talk about those things, that should get us our 8 marks. Remember, that's what we're doing. Okay, and we haven't looked at the reference material yet, and the reference material relates to the budgeted figures. And so let's do a quick analysis of this. So this will obviously relate to the first subtask. Perhaps we should have done that then, but we'll do it now. And this is the kind of thing that can happen in the exam. So this relates to subtask A, and this was on participative budgeting. And we've had discrepancies between actual and budgeted figures. And this is basically what is being covered in the reference material. So this is our budgeted figures. We can see here that across all of these, across sales, cost of sales and gross profit, actual results were less than budgeted. So budget, and that's just an extra bit of information we can utilize and put into our solution. So then, with all that, what we're going to do is take all these notes, think about our timings, and we'll put this together in a slightly more detailed plan.
And that now brings us to the end of this highlights reel for our case study videos. However, these are not the only resources you'll have available on the Astranti case study course. And of course, all of these materials are there to help you pass the exam, minimize your study time, and give you good value for money. Now, as part of the pre-scene pack, okay, you will have access to a pre-scene analysis video, of which there will be 6. And these will also include comprehension questions to help you revise the pre-scene, as well as the annotated pre-scene document you see in the video available for download. Then there's the top 10 issues, which we saw a moment ago, the strategic analysis, and the industry analysis. And these all come as part of the pre-scene package. If you get these materials on the Astranti course, then they will set you off in the right direction. And we have full confidence in these materials because we've been making them for over a decade now, and they are consistently one of the most popular products we offer, which many students have said were key to helping them pass the exam. However, what if you want more? You want more to practice on? Well, don't worry, we've got you covered there as well. As part of the premium course, there are a variety of products you will have access to, including 7 mock exams that you can practice on to assist you in your revision and, of course, help you learn from the feedback. And on that note, we do offer mock marking and feedback on the mocks you write, and offer additional support like our exam technique video series that help you become a better writer in the exam. And included amongst all this is tutor and mentor support, as well as 3 live masterclasses that you can join and ask our tutors questions that are burning inside you about the pre-scene company and the case study. And you get all this, including the pre-scene videos previously mentioned within the premium level course. And as another bonus, if in the unfortunate event you don't pass the exam, premium course students do also get a double pass guarantee. Don't fret though, if you don't want all of these materials and just want the mocks or the pre-scene analysis videos, you can do that too and purchase them individually. And so with that, we've come to the end of the video. And so I and everyone at Astranti want to wish you all the very best in your upcoming operational case study exam. If you want to learn more about the materials we have on offer, please visit us at astranti.com/SEMA.